Hello and welcome. You are watching World Business Report here on News 9 Live. I am Krishna Kumar. We begin with Wall Street, where stocks in the US ended higher on Thursday night on hopes of a potential interest rate cut after a retail sales slump. The Dow rose by nearly 1%, while the S&P 500 was up about 0.5%, while the Nasdaq was in the green, around 0.3%. A US Commerce Department report revealed a near 1%, or to be precise, a 0.8% drop in US retail sales for the month of January, which was a bigger decline than expected by analysts on Wall Street. This Reuters report gets you all the details. Take a look.
U.S. stocks closed higher on Thursday as investors hoped data showing a retail sales slump might compel the Federal Reserve to start cutting interest rates in the coming months. The Dow gained 0.9%, the S&P 500 climbed nearly 0.6%, and the Nasdaq added 0.3%. A Commerce Department report showed U.S. retail sales dropped 0.8% in January, which was a bigger decline than expected. That edged up bets for a Fed rate cut in May, but most investors still think June is more likely, according to the CME Group's FedWatch tool. Investor optimism has been buoyed by earnings, as roughly 80% of S&P 500 companies have beaten Wall Street's expectations, LSEG data showed. Robert Conzo, CEO and Managing Director of the Wealth Alliance, believes that's because most businesses have spent the past 18 months or so preparing for a recession, which so far hasn't come.
When you set up for something bad that doesn't happen, at the end of the day, that's probably a pretty good thing. And I think companies are managing their P&Ls very, very well and managing to get the bottom line stronger and stronger and stronger. And on top of that, you have a consumer that still is resilient. They are still driving forward, spending on and on and on. So you got a consumer spending, you got companies that are managing their P&L real strong. And I think that's really why that we have a revenue stream happening the way it is.
In company news, Google parent Alphabet dropped more than 2% after investment firm Third Point dissolved its stake in the tech giant. And Apple shares were pressured during the session as Warren Buffett's Berkshire Hathaway trimmed its large stake in the iPhone maker, and Soros Fund Management entirely dissolved its stake. But the stock bounced back in late trading and closed down only marginally. On Friday, a producer price index report will provide more clues about the direction of the economy.
Now, Amazon has announced a significant achievement. It has surpassed $8 billion in cumulative exports from India for the year 2023, with now a target being set to reach $20 billion by the year 2025. Amazon's highest growing export categories include toys, home and kitchen products, beauty products, furniture and luggage, with emerging trends in leather goods and Ayurveda products as well. Notably, the US remains the primary market for Indian exports, followed by the United Kingdom, Canada, Japan and Germany. Amazon's flagship sale events in the year 2023 significantly contributed to that export growth, with some categories experiencing up to 100% year-on-year growth. Over the past 1 year, Amazon has forged partnerships with central and state governments in India to support export initiatives, including a memorandum of understanding with the Director General of Foreign Trade to enhance capacity building for MSMEs across 75 districts in India. From retail giant to software giant, Microsoft, which has announced plans to invest 3.2 billion euros or $3.44 billion in Germany over the next 2 years focusing on artificial intelligence. Speaking at an event in Germany's capital Berlin, Microsoft chairperson Brad Smith highlighted the company's confidence in Germany, marking its largest investment in the country in the past 4 decades. The investment will primarily target setting up data centers and artificial intelligence training initiatives in the years of 2024 and 2025. Germany's Chancellor Olaf Scholz praised the move as a vote of confidence in Europe's largest economy. Marianne Janik, CEO of Microsoft Germany, noted that while exact locations for investments were not disclosed, focus areas include the western Rhineland region of Germany and around the financial center of Frankfurt. Listen to what Microsoft's chairperson Brad Smith had to say.
And it's an important day for Microsoft's history in Germany, and I hope and believe for Germany's future as well. Let me share the news and then put it in context and talk a little bit about why we believe it is of real importance. We're announcing today that Microsoft is investing 3.2 billion euros in 2 years, 2024 and 2025. And we're investing this money to do 2 things. The first is to double the capacity of our AI and data center infrastructure in the country. And the second is to invest in an accelerated and massive expansion of our AI skilling programs here in Germany. As somebody who lives in Seattle and the West Coast of the United States, we're constantly. Finally, I would say we are doing this today because of the enormous confidence we have in Germany.
Keeping it with Europe, where Airbus reported a 4% increase in core profits to approximately $6.2 billion for the year 2023, with the revenues showing stronger than expected growth. The company anticipates profits of up to $7.5 billion this year and plans to reward shareholders with a special dividend as well. Riding on a surge in orders from recovering airlines, Airbus is bolstering its cash reserves in contrast to its US rival Boeing, which has faced more and more challenges with its 737 MAX series of jets. Take a look at this.
Airbus is enjoying the benefits of a surge in orders. The European aerospace giant said Thursday that core profit rose 4% to around $6.2 billion over 2023, with revenue rising even more strongly. It's now projecting profit of up to $7.5 billion this year, and it's set to reward shareholders with a special dividend. Airbus is riding a wave of orders from airlines that are recovering from the global health crisis. That's helping it to build up cash reserves, in contrast with US rival Boeing, which has been buffeted by a series of problems with its 737 MAX jets. The European firm is now projecting 800 aircraft deliveries this year, subject to there being no new disruptions to global supply chains. It did, however, announce a delay in the entry into service of one new model, an extra long-range variant of its big-selling A321. The company's space business isn't going so well. Airbus said it would take a fresh charge of more than $200 million over the troubled unit. It has faced fierce competition from US rivals and a new generation of low-cost satellites. Reuters sources say Airbus boss Guillaume Faury has told staff that charges taken by the space business are not acceptable.
From aircraft to automotive news, Stellantis issued a warning of a turbulent year ahead following a 10% decline in operating profits during the second half of the year 2023. The company faced disruptions due to strikes, particularly in its profit-generating North American operations. These strikes cost Stellantis over $800 million in profitability and about $3.2 billion in lost revenues. More in this report.
Auto giant Stellantis warned of a turbulent year ahead on Thursday. It comes after the group saw operating profit fall by a tenth in the second half of 2023. Stellantis faced strikes which caused stoppages at its operations and its profit powerhouse of North America. The Jeep and Fiat maker said last year's strikes cost the group almost $808.4 million in terms of profitability and around $3.2 billion in lost revenue. Union strikes ended with record salary increases for workers at the so-called Detroit 3 automakers. The industrial action added to a tough outlook for car makers, which still face weak global demand for electric vehicles. Adjusted operating profit fell to $11 billion in the July-December period. Operating profit in North America was down 16% to $5.68 billion. Analysts said the results beat consensus, but vague guidance for 2024 did not add confidence. Stellantis stood by its forecast for double-digit margins on adjusted operating profit this year, despite higher labour costs in North America. Company shares were up after the update, rising more than 5%.
BHP Group is grappling with escalating costs following a Brazilian dam collapse that took place in the year 2015, which had claimed 19 lives. The mining giant BHP announced a $3.2 billion charge related to the incident following a recent court ruling demanding nearly $10 billion in damages from BHP and its partner Vale. The ruling remains subject to appeal. But what does that ruling mean for BHP? This report tells you all about it.
BHP Group faces ever-rising costs over a Brazilian dam collapse. The 2015 failure sparked a massive mudslide that killed 19 people. On Thursday, the world's biggest mining firm said it would book another $3.2 billion charge over the incident. That comes a month after a judge in Brazil ruled that BHP, partner Vale and their joint venture should pay close to $10 billion in damages over the collapse. The ruling is still subject to appeal. BHP also flagged a $2.5 billion impairment in relation to its Australian nickel business. A jump in supply of the metal from Indonesia has sparked a swathe of restructuring and write-downs across the sector. Now BHP says the unfavourable conditions are set to last for a long time. It says it will review nickel production and could mothball its operations. The firm is set to report first-half earnings next week. Analysts expect profits to broadly hold up, underpinned by strong iron ore prices. One told Reuters that the new write-downs were unlikely to hit dividend payments.
Shifting focus to Kenya, where citizens are facing daily struggles due to soaring living costs. A government decision to double petroleum taxes has made public transport unaffordable for many, forcing many of them to walk miles and miles to work. Higher taxes have also impacted businesses in Kenya, with a survey revealing that 40% of companies in Kenya have cut jobs over the past year, prompting some to consider relocating outside of Kenya. This Reuters report gets you all the details.
Kenyan furniture maker Jared Omondi now has to walk several miles to work every day. Public transport in Nairobi became unaffordable for Omondi after the government doubled the tax on petroleum products last June. Like millions of Kenyans, he's facing spiraling living costs caused by government measures to tame surging public debt.
Kula kwa nyumba ni shida.
It's been difficult having a good meal. You cannot afford to buy a half kilogram of meat, and if you have children, they have to eat kale the whole month. If you are to change, it can only be sardines.
Higher taxes are hitting business too. A survey by the Federation of Kenyan Employers of its 4,500 organizations, which employ 1.2 million workers, found 40% had cut jobs in the past year. Some said they were considering relocating to neighboring countries. Jacqueline Mugo is the executive director of the FKE.
If I look at the last year or so, I would summarize that employers are in distress. It's a very tough economic environment. The business operating environment is fluid, it's unpredictable, and we see this reflected in various ways. That distress is reflected in employees making very many demands on employers, and employers also having to look at the cost of doing business and making tough decisions about what to cut off.
On top of consumers reining in their spending, the Kenyan shilling also suffered. Last year, it fell 20% against the dollar, and markets questioned whether a $2 billion Eurobond maturing this June could be repaid. This week provided much-needed fiscal breathing space for the government after it succeeded in swapping out of that bond. Positive sentiment around the repayment of the bond and offshore investor demand helped push the shilling up more than 7% this year. Yet analysts said higher interest payments on the new 2031 bond and structural economic weaknesses are still an issue, and something that would likely keep the currency weak and taxes high, providing no relief for household budgets.
In a historic move, a moon lander built by Houston-based aerospace firm Intuitive Machines took flight from Florida in the U.S. in the early hours of Thursday. This mission marked the first ever U.S. lunar touchdown in over half a century and the pioneering achievement of being the initial privately owned spacecraft to achieve this remarkable feat. Take a look at this.
Ignition and liftoff.
A potentially historic space launch took place in Florida on Thursday. A moonlander was sent on a mission to become the first US lunar touchdown in more than half a century, and it aims to be the first moon landing by a privately owned spacecraft. The Nova Sea lander, named Odysseus, was built by Houston-based aerospace company Intuitive Machines. It lifted off from NASA's Kennedy Space Center shortly after 1 a.m. local time atop a Falcon 9 rocket flown by Elon Musk's SpaceX. The flight is carrying 6 NASA payloads of instruments designed to gather data about the lunar environment. NASA wants the info ahead of its planned return of astronauts to the moon later this decade. Plans call for Odysseus to reach its destination after a week-long flight on February 22nd. If successful, the flight would represent the first controlled descent to the lunar surface by a US spacecraft since the final Apollo crewed moon mission in 1972.
Separation confirmed.
It would also mark the first journey to the lunar surface under NASA's Artemis moon program. The US is racing to return astronauts to the moon before China lands its own crewed spacecraft there. NASA announced last month it was delaying its target date for a first crewed landing from 2025 to late 26. China has said it was aiming for 2030.
Shifting focus to China, where as the economy slows down, many Chinese youth are embracing the concept of quote-unquote lying flat, working minimally to sustain themselves and prioritizing time for personal me time amid diminishing job prospects. This Reuters report tells you all about it.
Chu Yi used to have a corporate job in fashion, but she quit after 2 years to become a tattoo artist because she hated her boss and often had to work overtime. The 23-year-old is part of a broader trend in China called lying flat, a term used to describe people who work just enough to afford to spend time doing what they enjoy. Chu now works just 1 day a week from home for a travel company and spends the rest of her time practicing tattooing as part of a 6-month apprenticeship.
In the past, when I was working, I would wake up at 8 o'clock every day and then get home at 10 o'clock in the evening. Every day I worked in front of the computer for 8 or even 10 hours. As my posture is a little wrong, then my shoulder immediately started having problems. And my spine was also in a lot of pain. And then with endless overtime and meetings, it made my spirit very tired.
There are around 280 million young Chinese who, like Chu, are born between 1995 to 2010. And surveys show that this Generation Z is the most pessimistic of all age groups in the country. There is no data on how many young Chinese are opting out of corporate jobs. But as the economy slows, the youth have faced diminishing job prospects. In June 2023, China's youth jobless rate rose to a record high of 21%. The average expected salary for new hires in 2023 dropped in 38 key cities, the worst drop since 2016, according to an online recruiting platform. All this poses a key policy-making challenge for Chinese President Xi Jinping. Yan Cho is an assistant professor of sociology at the University of Michigan.
So indeed, on the surface, it may seem that some Chinese youth today are opting out of this rat race of getting ahead. But in the Chinese context, it is also impossible to overlook a sense of pessimism that underlies these trends as well.
Away from China to the world of entertainment, were nominated for the BAFTA Film Awards in the UK. The historical drama Oppenheimer is taking the lead, having already picked up multiple awards across the board. Analysts suggest that the BAFTA's inclination towards local films might provide an additional boost to this acclaimed production directed by a Brit known as Christopher Nolan. Here's more.
Historical drama Oppenheimer leads nominations for Britain's top movie honors, the BAFTA Film Awards.
But we have no choice.
The movie about the making of the atomic bomb during World War II is up for Best Film, along with 12 other nominations. Tim Richards is the founder and CEO of cinema company View International. He says Oppenheimer could take home some of the night's biggest awards.
I think Oppenheimer, certainly for Best Film. And I mean, Chris Nolan is, he's a Brit, and I think certainly with the BAFTAs, he's certainly one of the most highly respected and much loved directors in the business, and I think he's got to be in there for Best Director as well.
Also in the running for top film, Poor Things, starring Emma Stone, Killers of the Flower Moon, Anatomy of a Fall, and The Holdovers. Oppenheimer was one of last year's highest-earning movies. It dominated the Golden Globes with 5 wins and leads nominations for next month's Academy Awards. The film's lead, Cillian Murphy, as well as Stone, currently lead betting odds in the leading acting categories. Here's movies editor Ian Sandwell.
Because it is the BAFTAs, you do get this local love. Cillian Murphy, Irish talent, local talent, British and Irish talent, is probably most likely to win.
Sandwell says BAFTA wins for Oppenheimer could give the film a boost ahead of the Oscars.
If Oppenheimer wins Best Film and Christopher Nolan wins Best Director, it'll be a massive surprise if they win at the BAFTAs that they don't then win at the Oscars, especially because the BAFTA wins come just days before Oscar voting starts. And there is this recency bias, so there is a bit of a crossover, but it's not guaranteed.
The BAFTAs take place on Sunday at London's Royal Festival Hall.
Exciting news for all the Bridgerton fans out there, as the historical fiction series has announced its return for a 3rd season. The Bridgerton cast offered the fans a sneak peek of the latest season, sharing a glimpse of the budding romance in the hit Netflix drama that has gained fans across the world. Take a look at this.
There we go. For me, please. Thank you. That's great. And then just above him as well, please. Everyone just see it.
I think it's one of the best tropes in rom-coms or friends lovers, like when Harry met Sally or Ross and Rachel, and I think it's beautiful actually this season. They finally have the guards down with one another, and they've known each other since they were kids. So I think it's lovely to see maybe how their relationship was at the very beginning when they were little, when they had no sort of self-consciousness, and you have a line which reflects that.
Yeah.
In terms of reality of storytelling, I think the conversation has changed. It's had to change because of our show. Casting directors, producers, the people who are making work now, really, I think, are wonderfully being forced to look at characters in a different way.
And the assumptions they might have made. The genie came out of the bottle with Bridgerton.
I think it's changed the face of television.
Well, that was rather direct.
And that's all we have time for on this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.